Hello everyone. Today I will discuss uh, uh, the Uber passenger or the taxi driver income and expense, how you can input it in Schedule C in your 1040 for US tax return. So in USA, for Uber and taxi driver expense is calculated in two different way. So suppose you want to use the standard mileage, right? So in standard mileage, maximum you can calculate the expense based on how many miles did you drive, and the standard rate. The standard rate is 70 cent per mile. So suppose you drive 50,000 kilometers, 50,000 miles, and multiply by 70 cent for each mile. So $35,000 is the cost for driving 50,000 miles. This is the standard method, standard mileage method. But if you use the standard mileage, then you cannot depreciate your car, and also cannot claim expense for gas, fuel, your insurance, your maintenance, car maintenance, repair, maintenance, insurance. So this type of expense you cannot claim if you use the standard method. And if you use the standard method, you can still claim some other expense like parking fees, tolls, and taxi license permit, cell phone, supplier water, accounting fee, or the fee you pay to your tax lawyer, and car washes, business insurance, and so these are the fee you can claim if you use the standard method. You can still claim it. And for the meal, there is some meal expense, and you can claim 50% of your meal expense, but not the regular meal. You can claim with your Uber, DoorDash, your Uber or taxi, the meal that is actually viable for the business. Suppose you eat everyday meal during your taxi drive, but you actually cannot claim all the meal expense. The meal that is actually used for entertaining the clients or anything else, that type of meal that can actually be claimed, or overnight shift. If you have any overnight shift meal expense, that can be claimed little bit. But the regular meal cannot be claimed for your as a meal expense. Okay, and the business code, this is the business code. And another thing is that for the car depreciation, there are three methods of car depreciation in USA. One is the Section 179. Another one is the bonus depreciation, and another one is the maker's depreciation. So the Section 179 can only be used if you are using the car for the first time for your business. Suppose like you bought the car 2 or 3 years ago, but this is the first time you are using your car for taxi business or Uber business, then you can claim the Section 179. And the maximum depreciation can be taken 20,400 for the first year with bonus depreciation. So this is the maximum limit. So you suppose you purchase car for $100,000, you cannot depreciate the full car in the first year and claim all the expense. That cannot be happened. So we can now try how we can enter the different types of depreciation in our tax software. Another thing that in Uber, if you see the Uber, there is a gross earnings. You will see there is a gross earnings 54,000 So this is the gross earnings. And Uber also deducts some fees. These are the Uber fee. Uber actually takes some fee from your gross earnings too, $15,441. And one is the sales tax. So we can categorize one item as tax expense and the other item as a commission and fees. And there is also tips in Uber, $6305. This guy got tips. So tips right now is not taxable. So we can input that information is no tax on tips, so that tips will not be taxed for the client. And let's check with the depreciation. So business, I'm using Schedule C. So gross income is 54,000 and expense we're using the actual method. So if I click on hit OK, actual expense, so if I click on edit, we entered 20,000, we claim 20,000. Suppose like we entered I can do one thing, the car expense is $20,000, so I can do one thing, I can delete it for you so that you can see again. Okay, exit, there is no fee now. Car expense, actual expense, hit on OK, click next. Toyota, suppose Toyota, and place 0101-2025, cost suppose $30,000, and section 179. If I hit 15,000, it will not gonna take the full amount. If I 6 makers 5, suppose I can take the maximum 18,400. Let's check how does the software work. Okay, so it's asking for 32,994, and there is also commuting miles, means that that you drive for your personal purposes. Is 2 miles. Suppose I'm just assuming that you drop this amount for a personal need. Okay, actual expense, suppose like you have gas expense each month 1,200 into 1,000 plus sorry 12 into 1,000 plus your insurance each year 3,600, repair 2,000, 17,600. It is for bonus depreciation. Okay, I'm calculating also bonus depreciation. So what actually it takes, so percentage of business use 94.25%. I took section 179 depreciation, bonus depreciation, and the basis makers depreciation. Okay, depreciation expense, let's check. Okay, it did not take more than 20,400 because there is a cap, so that's why it did not take more than 20,400. That is the software. If I input it, it will not gonna take. So I'll take maximum 179, and there is also bonus. So if you use bonus depreciation, then you can take the maximum amount. If you do not use the bonus depreciation, then you cannot take the maximum amount. And if your car is old and if you used your car in the previous year, then you can use only the makers 200% depreciation. This is the makers year 5 200% depreciation method. Okay, done. And so I have now, this is the car actual expense, and this is the depreciation expense, and this is the Uber commission and fees. And insurance I cannot claim because I already included the insurance in my car and truck expense. So what expense can I input on here? Suppose you are paying for meals. Okay, suppose like 50% meals, you can take, suppose you are claiming $1,500. And utilities, suppose you are using your phone, suppose you are using $1,400 in the whole year for your phone, and there is no wage. And suppose sometimes you need to rent machinery. Suppose you rent your car, suppose this car is not yours, then you can input rent. But as you are depreciating the car, that means the car is yours, so that car, so that the car cannot be depreciated more. Okay, let's check rent, property, repairs. One half of self-employment tax is not should be deducted from your net income. Okay, there's it's done. It is let's, okay, click on exit, okay. And there is self-employment tax. Okay, income from schedule 1, and okay, I'm just looking for the self-employment tax, what amount is deducted. Business income is only 1,634, and deductible part of self-employment tax. So suppose your self-employment, that I was talking about, suppose your self-employment tax is $350, then half of it is deductible from your adjusted gross income, so $175. In that case, $116 is deducted from your gross income. And qualified tips amount $5,000. Okay, I will enter some qualified tips amount. Okay, qualified tips deduction. So okay, it's done. So what is showing now? It's showing this amount due is $231. So you need to pay the self-employment tax. So your gross AGI is $1,518 and $1,518 multiplied by 15.3%. Okay, how much it is? $232. Okay, this is almost near that. Whatever your AGI will be, you need to pay the self-employment tax. And suppose first $15,750 is not taxable, but you need to pay tax on the extra money. Means that if you have income more than so if you have income, any income, suppose you have income $10,000, in that case 10,000 multiplied by 15.3%, you need to pay $1,530 self-employment tax. And if your net income becomes $100,000, multiplied by 15.3%, $15,300 you need to pay self-employment tax. That's why I told that if you make your business as a corporation, S corporation, in that case you do not need to pay the self-employment tax, and it will be a very big savings for you. Okay, I think I am making the video a little bit lengthy. I don't want to make the video lengthy more. I've just told everything that is needed to calculate for schedule C. Hope you see in the next video. Thank you a lot. Bye.